All right, we are here with Carese Busby, who's a mortgage lender with Caliber. I'm Joe Patterson, a real estate broker at Realogics, Sotheby's International Realty. And the premise for this call is that Carese and I talk frequently about what's going on in the market. And we just felt like with everything going on with COVID-19, that why don't we film it and be able to share with both of our spheres and anyone who's kind of interested about what's going on in both real estate and mortgage in the mortgage world. So, Carese, do you mind sharing a little bit about your background and how did you get here, basically?
Yeah, absolutely. Well, I'm a second generation mortgage lender. So I grew up in this business. My father was my mentor, and I, as a kid, used to come to the office and sit and listen to him counsel his clients, and really became enthralled with the markets as a young person. And I always knew through college and graduate school that I wanted to be a lender. I just enjoyed the interaction with the clients. I've always had a love of the markets and understanding them and trying to help people really get that. Finance is a challenge for a lot of people. And so if I can help ease that for them and explain it in terms that make sense, and to help them achieve their dream of homeownership and having a sound financial, having that part of their sound financial plan, that's really gratifying to me. So I feel very fortunate that I've been able to make a living and that I get to be in this profession and be able to affect so many amazing borrowers, as well as work with incredible business partners like yourself.
Oh, thank you. Thank you. Well, yeah, no, and to your credit, I mean, I think when I was first getting involved in the business, you really put yourself out there to answer any questions that I or my clients had. And, and as I kind of referred people to you, just kind of rose to the top, because I think people really appreciate having someone that's going to sit down with them and explain the process, define expectations, and basically just be this trusted advocate and really kind of fight for your clients. So, but yeah, no, I mean, I think that's great. And I think, I'm curious because I thought I heard that maybe rates have gone down, but what's happening with rates?
Yeah, and thank you very much for that. I've always tried to take that education approach. I think people are more confident to make financial decisions when they feel informed, and then they can make the best decision that fits for them. Rates are at historical lows. We've never seen rates in modern times down in the levels that they are at right now. Freddie Mac last Friday benchmarked the 30-year conventional loan at 3.28% on average, and the 15-year at 2.72. So the great news for that is that helps people's buying power, because their borrowing rate is lower. They can afford more house, and that helps in their budget if they're looking to do a refinance. Gosh, even if you purchased your home in 2016 when rates were at what we thought what were historical lows back then, it may even make sense to refinance now. So
yeah,
yes.
So are you seeing an increase right now in both mortgage applications, like new mortgage applications, as well as refinance? Are you just seeing more strictly with refinancing? I mean, how does that look right now, especially in the Seattle area?
Yeah, so the great news is last week, mortgage applications for purchases were up 11%, which is great news. And we've always thought in the US economy, real estate is the backbone of this economy. It drives so many things. I believe at one point I had heard there's like 275 different people that end up being involved when a real estate transaction, when someone buys a house. And that's really impactful to the economy. So contrast that as well with refinance applications. The mortgage industry historically does about 3 trillion a year in volume. The mortgage industry hit 3 trillion in volume in the first quarter of 2020. Wow. So not only do you have a global pandemic where companies have had to transition to remote work, you've got a lot of companies that are really at capacity. So a lot of challenges, but the great news is that we've all adapted, and people are getting really low rates and they're buying homes. It's a great opportunity right now if you're a buyer. With rates as low as they are, the other thing that I tell my buyers is some people are choosing to stay home, which makes less competition. If you're a buyer that actually wants to get out of your house and go look at the houses that are on the market, it's a little bit less competition than maybe it would be ordinarily.
Yeah.
Yeah.
So what about forbearance? I know, we've kind of been hearing some things about that, and I, as a real estate agent, I mean, I obviously counsel my buyers and my sellers, but I also counsel a lot of like my past clients as well. What does that mean, and how is that applicable to right now? And is there anything that we should be watching out for?
Yes, absolutely. Forbearance is a very, very important topic, and my industry colleagues and I are very concerned about getting the straight scoop out to people. Forbearance is not forgiveness, and it should be your absolute last resort. Look, if you're in a position where you're having to decide between groceries and paying your mortgage, then go ahead and do the forbearance. But you don't do a forbearance because it's like, well, gosh, maybe I want to keep that money in my account for a few months and just defer my payment. What forbearance is it's just a deferral of a monthly payment to a later time. The challenge with it is now Fannie Mae and Freddie Mac have come out finally with guidance that has said that yes, they will allow the deferred amount to be put on the back end of the mortgage. However, here is the aspect that clients need to be very careful of, and they need to check with their servicer directly on how this is going to be handled, because every servicer gets to choose how they want to handle this. If the servicer, if you do elect to do the forbearance, it will show as a forbearance on your credit report. What we do not know at this date is how that will affect your ability to refinance or purchase down the road. We don't know yet. We don't have the guidance yet from the agencies, Fannie Mae and Freddie Mac, to determine whether that is going to cause a waiting period. Back in the financial crash, it was a 2-year waiting period, and in some cases, a 4-year waiting period before you could buy or refinance again. But if you do opt for the forbearance, there's 3 main questions you have to ask your servicer. 1, if I elect to do this forbearance, how are you going to report it to my credit? What will happen at the end of the forbearance if I'm unable to make the lump sum payment? Because let's say your monthly mortgage payment is $3,000 a month and you decide to defer that payment for 3 months. Now you owe back payments of $9,000. You're gonna get a statement at the end of that 3 months for $9,000. So let's say you can't pay that. So you have to ask your servicer, what are my options? Let's say the servicer says, we are giving you the opportunity to go ahead and tack that on to the end of your mortgage. Great. That is going to be considered a loan modification. You cannot change the terms of a mortgage contract without modifying it legally. So that typically reports on a credit report. And based on everything I've heard so far, that doesn't mean something can't change, because these guidelines that are coming out are fluid. We just got guidance last week from Fannie Mae and Freddie Mac, finally. So as it is right now, that's going to be reported on a credit report as a loan modification. And going back to what I mentioned a few moments ago, if you go back to the financial crash, there were waiting periods. If you had a modification reported on your mortgage, you had a waiting period of 2 to 4 years before you could finance again. And we just don't know how that's going to play out yet, if that's going to be the same here.
Yeah. No, I think that's really good. That's really good information to have, because I think there's so many things that are moving at such kind of light speed right now, and they're just unprecedented, and we have no sort of historical to really say, well, this is what's going to happen and whatnot. And so I think,
Right.
just like you said, making sure that people are up to date on everything that's going on, I think is really important. If they do have to really make a hard choice of, you know, like you said, putting food on the table to, or paying their mortgage.
Yeah.
Yeah.
The one caveat I would add to that is there is talk right now if it's labeled a disaster. So there have been other instances that have happened, like in areas where there's been a tornado or a hurricane. Clearly, this is not something that people brought on themselves. This has happened to them, and they're now in this position through no fault of their own. And there is talk back at the government level, if this is tagged a natural disaster and is coded as such on people's credit reports, perhaps there will be some leeway and guidelines drafted that don't affect people's credit. We just don't know yet. It's really fluid. And that's why my advice is, hey, take the forbearance if you really need to. But
Okay.
if you can just keep making your payments, make your payments. You're going to be better for it in the end.
Okay, great. Well, thank you so much for kind of giving us a little bit of, you know, the rates and just kind of a snapshot of what's happening in the market. I think it's just really good for, you know, both of our spheres and anyone who is kind of in the market right now or is going to be in the market. But I want to thank you so much for your time, and I hope that we do this again soon.
Yes, thank you
Yeah.
so much for having me on.
All right, I'll see you later.
Thank you. Bye.
Okay, bye-bye.